Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Lots of news today. We've got new tariffs, this time on Europe. We have deliveries from Tesla, earnings from Pepsi, Bed Bath & Beyond, Constellation Brands, Costco also after the close today, and GoPro with some, even when it's good news, it's bad news for them. New products, bad guidance on GoPro, as Joe likes to call it, go low. So we got a lot to get to on our show. Our guest, Marc Chaikin, will join us at 8:15. In the meantime, Joel, fill us in on what has happened here overnight.
We're still green, not by much as we were. Pre-market high, 94.50. I'm just going to keep an eye on 2,900. Nice round number like that. On the downside here, 74 even. Yesterday's low. We haven't reached there yet, 78. So hang in there, folks. We'll 28.74. We got a chance to rally. Crude up, down 15 cents, 52.49. Gold back over 1,500, not by much, up a buck at 1509.80. Silver in the red by 1.8 cents, and Bitcoin holding another whole number, not by much, 8,230. Let's bring in Triple D. How you doing?
I'm here. I'm doing pretty well.
You doing well today? You're not going to complain?
Big hockey game last night.
The Oilers won. Wow. I have an announcement.
David.
Are you ready? You ready for the announcement? Over your hockey talk?
What do you have?
Okay. Are you sitting down?
Yes.
Okay.
That's apparent.
So you know my birthday's on Saturday. I don't like to talk about my birthday much, right?
Because you're getting old.
Yeah. Lisa is already regretting the birthday present she got me.
How do you know what she got you?
Because I picked it out. I wanted it. Guess what I got?
Well, you haven't. This isn't your birthday yet. You shouldn't even know. Okay, what are you getting? What are you getting?
The Wings.
I got an iWatch.
Oh my God, Joe got
an iWatch.
Joe got an Apple Watch.
I got
an
iPhone watch.
Are you going to become a runner?
I don't know. I'm talking into it. I'm like trying to work it.
You already have it? You can't get your birthday present before your birthday.
I had to go out there, and I spent 2.5 hours at the help desk. I drove the guy absolutely crazy. They had to update my phone, first of all, because I have a really old phone. But I'm going to learn how to work this puppy, and I just think it's good. It's, there's some health things on there that I track. You track your sleep. I see people. Yes, it's waterproof, Spinner, but you have to change it to the water mode. So it's going to take me a while to do it. I'm a watch guy. I love watches, right? So I got an Apple iPhone watch, and I want to get rid of my phone, but Lisa's keep telling me that you still need your phone, which I'm a little disappointed about. But
you want to just talk into your phone.
Yeah, but it's a sporty band and everything. I'm wearing it today. She wanted me to put it.
So you're telling me to get Longmore Apple because they're getting a big sale this quarter coming up.
Well, or
was that last quarter's numbers? Wait, when did you buy it? It's important information.
Yesterday.
Oh, so it is. So it's going to be for this quarter.
Yes. I think the point is, if even Joel was on board, then we know it's mainstream.
It means everybody's got it now. Joel gets it. It means everybody's got it. It means sell. It's the top.
It's 56 degrees out right now.
It's the top. When you got your GoPro camera, that was the very top.
I don't have a GoPro, man, and I don't.
When my neighbor came over and had 2 GoPro cameras, he's like, "This is awesome." That was the very top. It really was, for real. When you have your neighbor come over and he gives you 2, he shows you 2 GoPro cameras. He doesn't just have one, he has 2. That's the top. That's when you sell. That was when it was $90. So it's a good segue. Do you want to go to this segue?
If anybody in the chat has one of these, could you give me a call or text me or something? Because I need some help figuring this thing out, man. There's no
technology and Joel don't go hand in hand.
I'm going to figure this
out. As we've seen when he runs the show sometimes.
It's not pink. It's nice. Can you see it?
What color is it?
It's a gray, metallic silver blue band, and it's got a black face. It kind of changes on on the fly and stuff. But
So you got to get on Strava now, and we're going to run. So you're not just going to be a swimmer, you'll be a runner.
I don't know about that. But you know what? I've taken up enough of our precious time here. So what do you want to do?
You're impressed with this new watch. No, we got to go GoPro. So we just hinted at it. Your favorite stock, Joel, down 17% here last night. This stock and obviously this morning here is trading down 17%. Spencer, give us the headline here. It doesn't look good.
Right. So they announced some new products, actually, and one of them, the Hero 8 Black, due to a late stage production delay, is being shifted from the third quarter to the fourth quarter. But along with those new product announcements, they also said, oh, by the way, we're cutting our guidance for the second half of 2019. Adjusted EPS guidance for the second half of the year was lowered from a range of 37 to 49 cents to 33 to 39 cents. Sales growth was lowered from 9 to 12% to 6 to 9%. That was for the second half of the year. The full year guidance obviously also cut. Q3 sales guidance cut by a lot. The Q3 sales guidance was $308 million. Now it is $123 to $127 million. So they cut their Q3 sales guidance by essentially half.
The old cut the guidance trick.
More than half. The
old cut the guidance trick, Joel. It's never usually good for the stock, and in this case, it is holding true. This stock showing a little bit of life with this laggard became leader rally. Laggards are laggards for a reason, though, and they eventually start to lag again, and now there's a stock that's coming right back down near the lows. I don't know. I'm not a fan. I think the ship has sailed for most GoPro longs. I think every rally is still to be sold, including the one we had recently. This is a sell-off, so I am not a dip buyer in GoPro.
And if you guys want to look up something good, the JP Morgan let the founder of GoPro out of his covenant to sell the stock like around 90, 95. Look that up. It's just unbelievable they let him do that, and he's laughing all the way to the bank on this one. We're trading down in the pre-market, but off the pre-market low. I'll give you the pre-market low comes in at around $4 here. Let me see. The low on that bar was 4.06. So there's your pre-market low. The recent low of the move in September comes in at 362. So, I mean, it's already down a lot. I don't know if we'll see that 362 today. We'll see if any buyers step up to cover shorts around the pre-market low. Kind of looks like you even got a buyer here at 420. This is over the last hour. But
I mean, anybody who was short, and there's a point to be made here, it really ripped. So you're like, oh, thank goodness I'm out, or you can get out. But I just think the long-term story here is still in a lot of peril. So that's why I'm just not coming in here.
I mean, especially with wait, is there a camera on the watch? Do you know? No.
On your Apple Watch?
No,
there's not a camera.
There's no. I don't have one. I don't know. I don't have one.
But I'm just saying, Apple.
Look at it. See if you can take a picture of yourself. Do a selfie right now.
Maybe. I don't really know. But
maybe you're taping this right now. Maybe you're recording and uploading it.
No, I'm not.
I see you on YouTube. Maybe it's coming from your watch. Okay. We digress. Let's go to Tesla. This is a story of at least last night. Tesla numbers everybody was waiting for, and they have indeed disappointed.
Right. So the good news is it was a record quarter for them in terms of production and deliveries. They produced 96,155 cars and delivered about 97,000 cars last quarter. Those are both records for the company. The bad news is they were both below the estimate, and Elon Musk had said they could exceed 100,000.
Well, there was a leaked email that was saying something about 100,000, and we don't know if that was true or not. Obviously, it was not true because it did not quite get to the 100,000 number. So it did not beat the leaked email numbers.
Right, and also I heard from Stubbs over here that the consensus estimate was at 98 or 99,000 cars. So they missed the consensus, and they missed the 100,000 mark in that leaked email. So record quarter, but not as good as expectations still.
It remains range bound, 220 to 245. That's been the range here for the last couple months. I guess you keep looking at that. So 232, you're in the middle. So I'm not striking either way. But I will say I'm never selling Tesla down $10. It just seems like they buy it on bad news sometimes anyways. So No position. I did cover those options, Joel, and maybe the trader in me got nervous there. It had the little rally there the last few days, and I used that opportunity to cover my puts, my sold puts. So I have no position on Tesla again, although I'm looking to reinitiate and resell puts again. So
nice trade.
Yeah, I may come back in. Jeremy Newsom covered, and I was like, you know what, I'm going to do it too. I booked a nice little gain on the options. 30% gain, I believe it was, and I'm going to, well, maybe not quite that. It wasn't quite as good as Jeremy, because I was out so far, but it was over a 20% gain. So it was good. It was good.
Pre-market.
I'm going to go back in, I think, though. Right puts.
28.43. That's your pre-market low. Actually, you call it an after hours low, and you hit that, and then on your daily, I see one number there, and that number comes in at 27.40. So you're $5 above it. So I'll call it 27.5, 28 buy zone. On the upside here, big gap. Not that huge gap. I think your resistance now will come in at 240. That is the area of yesterday's low, 239.43. But definitely a trading range and heading back towards the lower end of the trading range. If they really get carried away in this one, Dennis, and it gets down anywhere around 210, 211, 212, you got a trio of lows. It's just called 212. That's the number on the downside.
But if you look at the after hours chart, I mean, this thing got hit and it's kind of stabilized here now. So it doesn't look like they're just coming in here and sell. Sometimes when you look at these pre-market charts and you see the stock just leaking, you're like, oh, this hasn't even stopped going down yet. I mean, this numbers came out just after the bell. And so we've had, 8 hours of pre-market and after hours session to digest those numbers. And we really haven't even went back down to test the initial spike low. So it seems to be finding its home here down $10. I mean, anything can happen. We're going to have probably a wild day of trade here again, too, with the overall market volatility, which we can talk about in a second. But I think as of now, I don't see this thing going down and just starting cascading down to the 220 today.
Yeah, I agree with you here, because on these charts, I mean, someone missed the low at 28.40, and then they went to sleep and they woke up this morning. They're like, I'm not going to get this at 28.40. And they started bidding around the 230 range. And you could just see, on the 15-minute chart. And that's why, a lot of times you can tell that 15-minute chart when someone you have a stepped out seller. I wouldn't really call it a step up buyer. I'd just call it a patient buyer here, trying to bring stock in 228.40 to, 230 area.
So one thing I wanted to note yesterday, which was very interesting to me, is, it felt like an everything sell-off yesterday. It really did. But if you really look under the hood, and I took some time to look under the hood, you know what held up well yesterday?
Your high beta.
Yes, they did. The Rokus, the Shopifys. Yes, some of them were down, but, like Chewy, CHWY, actually ended up closing green. With some of the recent IPOs like Pinterest, ended up closing green. These things have been hit so hard. Another one was Slack Technologies, which is WORK. A lot of these stocks actually, for some reason, held up well in a terrible tape yesterday. So that's telling me one of two things. This market is not as nervous as it is. Maybe it's seller exhaustion in all those stocks because they've all been hit really hard. But, I was on the record yesterday saying I like Roku here, leaning on the 98 low. I mean, you got down to 99, 98, so $100 yesterday, and it held. You know what? It's still holding here this morning, despite us being down. Roku's actually trading in the greens. So showing some life is some of those high flyers from, August. And if we are to turn, it will be those high flyers, I believe, that lead us out. So if you are looking to buy stocks here, I'm actually interested in those Shopifys and Rokus right now. Now, I mean, if the market turns over and we saw another 500 Dow points here today, it's probably going to drag everything down with it. But if we do turn on this market, look for those leaders from August to maybe start leading again here.
Look at that. You have 3 of your last 1, 2, 3, 4, 5, 6, 7, 8. You have 3 of your last 8 lows in the 98 handle. You have another high.
Defined risk.
99. Yeah, there it is. I mean, I'm looking at this chart. Also, I really like you had the gap fill from August, right? Yeah. So you more than filled that. I mean, definitely identifiable out. I mean, it's good to retrace some of this move someday, right? We went
It could. I mean, look, we've lost 70 points. Does it still make sense at a valuation here? No, I don't think so. I'm not sticking to my long-term investment portfolio. But as a trade, I like it here. The swing trade, I said it yesterday, I liked it. And you know what? In a terrible tape, you wouldn't have actually lost money on it. So actually, relatively speaking, it was good yesterday. And maybe it holds up here again. Maybe eventually these start to roll over. And if you start to lose one of Shop or Roku, they probably all fall. But we saw the stocks don't make money. And the Kramer's been, saying that the ones that don't make money, these have been, ones you got to stay away from. I'm going to say right now, this morning, right now, those are starting to show some life again. They haven't shown life for, the better part of September. But in the last couple of days, they're starting to show that they've stopped going down. So is this a pause to go lower? Maybe, but that was a really bad tape. You would have thought if they wanted to go lower, they had every excuse to do it yesterday, and they did not. So I'm looking at the Pinterest, I'm looking at the Roku, I'm looking at the Shopify's and saying I'll lean on the lows of the recent move, especially in Roku. It's more defined here, but you can lean on Pinterest too and say, hey, the low of the move is 25.14 of this recent move. If I want to buy here in the 26 handle today, I risk myself $1. Maybe this thing can rally back a couple of dollars. I like the Roku setup better because it fell so far. I feel like Roku could rally $10 in a heartbeat. And, everybody would be like, whoa, it's back. I think Roku's setting up. Now, if it takes out the low, all bets are off. That's, a defined risk. That's what it, is about, having a contingency plan in your trading and knowing where your out is. Takes out the low of the move, I'll be out of the trade. I'm not in it yet, but I probably should have bought it yesterday. It was just such a terrible tape. I was scared of everything. But I'm looking at this. I kind of like this from the long side.
Let's get Marc Chaikin's thoughts on this. Marc Chaikin, who's the founder of Chaikin Analytics, joins us every other Thursday. Marc, are you also watching some of these high beta, volatile tech names like Roku, Shopify, Pinterest?
Did you see that action yesterday? That all of those stocks, a lot of them actually closed higher?
I think that was short covering. I'm going to take the opposite side of your trade here, particularly on Roku, where everybody's talking about the brokerage wars. We've actually got the streaming wars going on. Yeah, and it isn't pretty. It started when Disney announced their new package. Excuse me one second. We're moving, and there's dust everywhere. I encourage everybody to keep reading on the Kindle, and much as I love real books, don't buy books, because when you move them, there's dust galore. It ain't good for your allergies. But back to Roku, I think there was short covering going on yesterday afternoon in these names. From Workday to Pinterest to Roku. But the streaming wars to me are really interesting because these are big names that everybody's in. And so far, there are all losers in there. From Apple to Disney to Netflix to Roku, I think you've got a group that's just under pressure. Comcast, which is partially a streaming, so they're not totally dialed in.
They will be, I think, though.
They're the winner. Well, the big winner is Akamai, by the way. We can get back to that. But what bothers me in this space is you've got so many players now, and nobody really knows what the economics how the economics are going to hold up. I will tell you this. This is just gut instinct. Based on Apple's first offerings, this is such plain vanilla, tepid, appeal to the family kind of content. I don't think Apple's going to make a dent against Netflix or even Amazon Prime, who are really making cutting edge stuff.
Well, so if you think Apple may not compete, I'm not sure if you think Disney's going to compete or not, but what are your thoughts on Netflix? Because Netflix actually had an okay day yesterday too. I mean, this stock has really been whacked. I mean, the valuation, I've been on the record saying I think it eventually goes under 200, but I'll say in the short term here, it looked okay yesterday too. It held up. Some of these big high-flying tech names held up, and Netflix did too. Maybe it's a short covering again yesterday, but I mean, a day that the Dow's down 500 and I see a stock close green, I think, hey, there's a little relative strength going on.
There is. I'd rather see that happen in a stock that was in an uptrend instead of a stock that was making lower lows. So right. I've never been a fan of Netflix, as you know. The cost of content is so high. They're totally dependent on the capital markets to keep it going. You know, Roku doesn't have profits. Netflix arguably doesn't have profits, free cash flow. So if you're bearish on the market, or at least negative, and you think the window may close in the capital markets, which companies are not going to survive? You know, is WeWork's going to survive? Is Uber going to survive? The good news is we didn't have froth at the top. We had fear in all these names, so they've been coming down. And that's why I think we're probably not heading into a bear market. But these stocks are so conflicted in terms of the difference between what I'll call the private market value and their need for cash, that I think this is a game that's hard to play. One thing you should realize in Roku, a big part of that up move, in addition to the momentum players, was Motley Fool. Motley Fool pounded the table on that stock, and they did extraordinarily well in the $60 range back in April, May. And the fools don't get out. That's their whole raison d'etre. You stay through thick and thin, and then eventually you get a 10 bagger or a 20 bagger. But the public has a pain point, and I think you saw the pain point last week.
I mean, Roku's come down so far. And just to clarify, like my long-term thesis is I don't like the valuation. I'm not a fan of Roku in your long-term portfolio, but I am a trader at heart. And I look at this and I think, well, it stopped going down, and I can lean on a couple lows there at 98 and say, maybe I get a shot at this upside. I risk myself $5. And if it takes out those lows in the move, I'm going to get out. But if it, starts to show some life here, which it did yesterday, it tried to, it's just such a bad tape. So, I'm short-term bullish, but long-term bearish, if that makes any sense at all.
It does. Well, let's look at seasonality then, because I have modified my short-term view of the market. I've been extraordinarily bullish by the dips for the last 6 months, even in the May and August declines. We broke some key support levels yesterday at 29.40 the previous day, and then 2900. We're in October. Some people have documented why. I don't want to talk about that because it's, like conspiracy theories, but there's been a myth that September is the bad month, not October. Could not be further from the truth. So whereas we might find a short-term low here, we're at risk at a minimum of a 10% decline. We've always labeled 6 to 10% declines in the S&P as pullbacks. They typically last a month and then they're over and recover to new highs. Well, 10% takes you down 300 points to 2730. And it doesn't have to happen in one gulp, although it usually does in October. So let's say we bounce here off the 2830, 2850 level, and we rally and the rally fails. End of month, we could be seeing 10% down to 2700. The uptrend would still be intact, 2700, 2730. The uptrend would still be intact, but that's why I think bottom fishing here, you got to be really nimble and be prepared to view these as 1.5 to 3 day trades if we get a bounce.
It's hard when you lose 800 Dow points in 2 days. To call the exact bottom, because it's going to be wild, and obviously, there's going to be a few people who are underwater too. So as you get a bounce, you have natural sellers who are people maybe were trying to buy the dip on the first day and are burned here right now. So it's not easy sledding to just climb right back up.
One thing I would say is the consumer is still strong. Home building numbers are positive. The ISM manufacturing number was clearly a downer. It's sort of a 50-50 toss. If it goes below 45, it's game over. You're actually in a recession. But we stopped at, 40.478. At that point, it's a 50-50 toss about whether you go to a recession or not, or you bounce. So that number doesn't bother me. What bothers me here is the president.
I just want to clarify one thing. Historically speaking, October is the most volatile month for the S&P, but September is the worst performing month of the year for the S&P 500. October has the volatility. September actually has the worst performance. But Marc, it does seem like the market is nervous right now. You mentioned the weak manufacturing data. Do you get that sense as well that we're all just sort of sitting on the edge of our seats here?
Well, I think it's actually pretty fundamental. Political upheaval in Washington doesn't cause bear markets historically. Recessions do. And every time you get a number that has a whiff of recession attached to it, the bears come out. But even more important, that number was forecast by Janet Yellen over the weekend. Janet Yellen said the Fed is overestimating the strength of the U.S. economy. Now, what does that mean? It means interest rates are going to have to drop. If interest rates drop, that hurts small caps and it hurts financials. And a lot of small caps are in the financials are in the small cap indices. So the leaders that suddenly look like they were getting traction, like the banks, JP Morgan, made a new all-time high, I think it was a week ago, suffer. So I want to take it up to the political level, which I rarely do. President Trump is under siege. We know that. It's a fact. What does he do? When he's cornered, he lashes out. What he can't do right now is give us those wonderful bullish tweets on China trade, because he's obsessed with defending himself.
Oh, good point.
And so, and what are the Chinese doing? These are the shrewdest gamblers on the planet. You ever, been to Hong Kong or Macau? They're just dialed in gamblers. They can read people. So what's happening here? The Chinese are looking and saying, this guy was tough, but now he's got other things on his mind. The Chinese, which were inclined to wait him out anyway, because everybody said there's unlikely to be a trade deal before the election. They're just sitting there watching, thinking, gee, we may be dealing with someone else in 6 months. So I think that's a problem. And also the reaction to the EU, which the W Trade Organization yesterday, which in theory was favorable, which said, yeah, we've been hurting the US with these tariffs, so you can put 7.8 billion in tariffs on Airbuses. Well, what does Trump do? Not only put tariffs on Airbuses, but on Scotch whiskey and cheese. It's going to escalate. And I think that the two things that have helped the market rebound above 3,000 in the S&P have been Chairman Powell's dovish stance, which basically said, yeah, we overreacted, so we'll give you that July rate cut, but that's it. That's now off the table. I think there's going to be more rate cuts, which I had not thought. And number two, positive developments that we get basically via tweets from President Trump. I just see is less likely that we're going to see these in the month of October. And Spencer, just to clarify, yes, there's volatility in October, but there are also crashes. That's why I don't buy this September as the worst month. 1987, 1997, 1998, 2008, the market crashes in October. It doesn't crash every October, but when it does crash, it's October. And the good news is they tend to be V-shaped bottoms. So I'm concerned about how this market finds support, what stimulates a rally other than short covering. You pass the beginning of the month when typically, new money goes into pension plans and so forth. So I think October is dicey for the market. I wish it had played out differently, but these are the cards we've been dealt.
Marc, one thing I want to hit on before I let you go is you sort of teased it earlier. Why is Akamai, AKAM, why are they the big winner here of the streaming wars? You sort of teased that.
They make the technology. They're not content creators. They make technology that enables faster streaming over the internet. So if you've got streaming content like Netflix and Disney will and Amazon Prime and Roku's not into content yet, but they're a bundler. You need technology like Akamai. The chart is magnificent. It's it is late in the game. Stock is long in the tooth, but at the right price, I think Akamai is a clear-cut winner. I don't know who the content streaming bundling winner is going to be. I can tell you it's not going to be Apple in my view. And I don't think there's an appetite for these Ozzie and Harriet kind of films that they're starting to promote. That's Disney's domain. What's Apple doing there?
Yeah.
I see you laughing.
No, yeah, you're probably right. You're probably right about that.
Reference. No, Marc, this whole streaming thing to me, I mean, how much time do you spend on your phone streaming on a daily basis? Because I could tell you, I spend no time. I mean, I don't watch TV. But
lots of other people do.
Really?
Yeah.
A little screen like that?
You're not the target market, Joel, either.
It might not be the phone.
The younger generation does.
I stream on my TV.
Might not be the phone, but I stream on my iPad.
I stream. I'm streaming too.
I'm streaming the iPad, but
if Joel starts streaming, that's the top.
I'll tell you what, if Joel starts streaming on his Apple Watch, then
that's
really,
the top. Sell everything.
Really in trouble.
I'll give you another. I like these anecdotal observations when they tie in with technicals. Let me just throw one name into the mix. Goldman Sachs and Marcus. I was driving, believe it or not, taking some paint cans to the dump, in essence, the reclamation center, because they won't pick them up in the garbage here in Philadelphia. Okay. And I happened to listen to a Marcus commercial. It was singularly the worst commercial I've ever heard. Some 1960s hippie saying, wow, this is like when I got my first Dead t-shirt. You know, it's great. I don't know what they're doing. They're trying to appeal to millennials with 1960s, 70s hippies vibes. If Goldman Sachs can't do better than that in a radio commercial.
The only thing I know about Marcus is they have the highest or near the highest interest rates on their money market accounts. That's pretty much the only thing I know about them. But I know they do have high interest rates, so that's a good thing.
That's a good thing. Bad commercials, high interest rate. Okay. At least, you know, this is subjective. It's the worst commercial I've ever heard on the radio.
All right, Marc Chaikin is the founder of Chaikin Analytics, longtime market veteran. Joins us every other Thursday. Marc, as always, thanks for your time. We'll talk to you in a couple weeks.
All right, next week in Connecticut, guys. Big change.
Have a good one.
Be good.
All right.
What did he say he saw the commercial for?
Marcus by Goldman Sachs. It's their banking arm. It's their retail banking arm. Yeah.
Okay, I didn't get the name of that.
Yeah.
Okay. S&P's holding in here, folks. So 28.74. That was your low from yesterday. That's being defended right now in the pre-market trading. 28.78 your low. We're up 3.5 handles. So it's good. I mean, staying green here, stayed above yesterday's low. Boom. If you we take that out, what do I have? I have 28.53.50, but that's the only level underneath 28.74. Let's see if it holds.
So back over here, we could go ratings. Where do you want to go?
No. Let's go.
Do you want to do the earnings?
Yeah, do the earnings here. So
okay, we got 3 big ones.
Yeah, let's start with yesterday. So we'll go to Bed Bath & Beyond here, BBBY. They were out after the close at around 4:15. Q2 adjusted EPS 34 cents. That beat the 29-cent estimate. Sales missed 2.71 versus $2.76 billion. Full year EPS coming in at a range of $2.08 to $2.13. So the earnings beat. I think that guidance may have been a smidge light. And the story is they're down 4%.
The story is this needs to hold 950 because if 950 goes, there's nothing below it. So I know it was trading below that after hours last night. It has rallied back up to hold 950. That is the key level for me. I don't like the fact that the last rally brought it right up to 11 on the kisser again, which we talked about. I think if you go back to the show before that, I was like, there's room to 11 here. And actually got to 11 right on the kisser, 1098, we'll call it $11, and then turned around ahead of the number. Then the number's disappointing. Below 950, this could just start cascading. Once a dog, always a dog. I'm just not a fan of this company at all. I think the recent rally was just the laggard rally, so everybody buying everything that was beaten up, and I don't think this company is turning it around anytime soon.
Great area. I mean, you can't argue with that. Your pre-market low comes in at 930. Actually, you got a 920 print in there, but go to the dailies here. This is the stuff Dennis and I look at. I mean, you had a buyer for how many days in a row at the 950 area? 1, 2, 3, 4, 5, 6, 7, 8 days in a row. So you don't know if they were just scalping and dumped it out at 11 here, but that 950 is a big area. Also, if you're a retracement fan here and you think, oh, I missed the rally, but I want to buy it on a 50% retracement, you had a little bit less than almost a 4-point move. So let's call it 2 or just under that. That would take you up to the 950, 960. Just a lot of confluence there. Let's see if BBBY can hold that off the open.
Then this morning you get PepsiCo. It is trading higher here. I don't like buying anything that's in this tape right now that's coming back up near the highs. So I'm probably going to be a fader of the move. Although we've seen, I don't know if I'm coming in here and shorting it, but if I was long, everybody who was in this yesterday is getting their money back all of a sudden. It is the kind of stock that can rally in a weak tape, although they were hitting all those stocks yesterday here too. So give us the numbers on Pepsi and then make our final determination whether we like it or not.
Yeah, the headline numbers were good. EPS beat $1.56 versus $1.50. Sales beat 17.19 versus 16.93 billion. So beat and a beat. And the full year adjusted EPS guidance was essentially in line. They 2 cents light. 5.50 was what they said. 5.52 was the estimate.
Joel, what do you think on this? I mean, 138 is huge.
I'm just going to ask you, can you see the book that far away?
There's no book. It's NASDAQ. They pulled the rug out from under us here, and they moved this to the NASDAQ a number of years ago. So the PEP 3 symbols doesn't work trick on this one. It is a NASDAQ issue. So, I mean, you have the NASDAQ total view. I don't see anything on NASDAQ total view. Typically on size, you see more on the NYSE Legacy Exchange where, you know, you get the NYSE Open Book. You might see some sellers there. But, you know, it doesn't mean they're not there. So 138, when it trades through on the Kisser, often means if maybe an institutional algo lightening up there. So I'm gonna say 138. That's my resistance point.
Yeah, I mean the all-time high is 139.30, but your all-time closing high is 138.39, and then I just see those couple moves over 138. You popped over there near that area 2 or 3 times. So if I was like long this thing and I would like, okay, I want to have my first target. That would be the 138. I'm going to even step up ahead at like 137.75, something like that, 138. If it does get a pop, I mean, at the all-time high, I'd use that as another target at 139.18. That was made just on September 4th. So kind of agree with you yesterday on this one, just based on yesterday's price action. Like, holy smokes.
Everybody gets their money back all of a sudden on a good report. I'm not buying it. I don't know if I'm shorting it because this is the kind of stock, like I said, that could just keep going. I've seen that happen before, but if I was long, I'd probably say thank you for giving me my money back that I lost yesterday.
Then the last one we have here is Constellation Brands, STZ.
How's that?
Reporting reporting this morning, EPS excluding canopy growth is $2.91 versus $2.
Why do they exclude canopy growth?
It's an investment of theirs, right? So they're just excluding any earnings from that.
Because the earnings are negative for.
Yeah, because it's a loss.
Well, okay, that too. $2.91.
We're like regretting our huge purchase into CGC right about now.
Okay, so the EPS excluding canopy beat. Sales were in line. They raised their full year EPS guidance also by about 40 cents from $8.65 to $9. And yeah, you're right. Canopy is a loss, so that would be why they excluded it.
So this was trading up last night. I thought about going short in the report just because they were giving you a $3 lead. The thing was trading up in the 209 handle, but I did not. No position on it for me. It's trading 200 even. I don't know what to say. These things, you know, this obvious spirits maker here. It's usually not a stock that just gets killed, but it doesn't look great on the chart here either, and it does look like air below. So I wouldn't be coming. I'm not coming in here and buying it at 200. I'll say that.
And period of consolidation after you run out, taking it out the lower end.
Yeah, I'm kind of scared of this chart.
I don't know. The only daily low, I think on this one, I would hold out for 196.63. That was your August 28th low. And you actually had a couple other lows right in that area. So I see 197 as well. So confluence there with the pre-market low. I like it. Pre-market low at 96.80. So use that for a target. If it doesn't come to you, then you may be buying this thing on the rebound in order to fill the gap from yesterday. Ooh, long ways to go. Yesterday's low. 204.31. So you might see that real quick if that, you know, get some buyers off the open. So look at that. 197, 204 predicted trading range in Constellation.
I mean, I'm really kind of myself just analyzing here in the last minute. I'm really kind of swimming upstream here, and no pun on streaming, but just because I'm ignoring, you know, it was a very weak tape, and you have all markets, you know, media, especially Jim Cramer even last night, saying, oh, the defensive stocks, you know, they do well here. They can do well in this kind of environment. You know, he was pounding the table on MKC last night because it's the kind of stock that can actually go up in a poor tape. And we didn't see that yesterday. We saw Coca-Cola get whacked yesterday hard. We saw XLP get hit hard yesterday. We saw the XLU get hit hard yesterday. So we were not seeing yesterday's sell-off wasn't your high-flying momentum names. That's why it wasn't typical. It was the stocks that, some of the consumer staples, some of the stocks that are viewed as more defensive. Even some of the more lower PE stocks were the ones getting hit. It wasn't the high flyers. So Pepsi, Constellation Brands kind of fit that bill of more defensive. Spirits, make your drinks, people drink pop, and eat their potato chips no matter what. So I don't know if it's the kind of stock that I do want to be buying. It's crazy, but I don't mind the Rokus and the Shopifys here. Again, with a tight leash. They start making new lows, I don't want them. But I feel like these are going to be the stocks. I think you're going to look at Roku, it's going to be up $10, maybe one of these days. And everyone's going to all of a sudden, everybody's going to be talking about it again. Stopped going down, performed well the last 2 days. Very poor tape. I mean, look at the SPY the last 2 days. Look at Roku the last 2 days. That's telling you that there is some buyers in here because the natural arbitrage hits that. So you have other buyers in there holding it up. Why? Is it short covering? Like Marc says, probably some short covering, but there may be other buyers in here too. So I don't like the Pepsis and Constellation Brands here. I like more of the Rokus and the Shopifys. Again, just on a tight leash though. I don't want them to start making new lows. So if I was buying Shopify, I would not want to take out yesterday's low of 300. If I'm buying Roku, I don't want to take out the 98. If I'm coming in here, and I can give you some other names like Work, which is and these are not long-term plays. These are all short-term trades. But I like the tape yesterday. I don't want to see it take out yesterday's low of 22.12. So tight leash on all these. But I think if it turns, I don't think it's going to be the Pepsis and the McKessons and the Constellation Brands that are going to lead us out of here. If we do turn higher, it is going to be the Rokus and the Shopifys that do it this time.
I'm trying to come up with an acronym here because you mentioned Shopify and Roku about 42 times.
No, I know on this show, and I've pounded. Obviously, I'm
I know.
And pounding the table. I think these stocks have stopped going down in the short run.
And then
so Marc took the other side of my trade. Kramer was basically, taking the other side of my trade last night. Was he was saying you can't own any of these new IPOs and high flyers, and I mean, I don't think he's read the recent tape action from yesterday because I've said all along I don't want to own any of these stocks. It turned 2 days ago. They stopped going down. And they've started to consolidate a little bit. And maybe, again, we don't know. The jury is still out here. If they start to have a really bad day, I'm going to get out. But I just think you have defined risk here. Why not take a shot? What do you think, Spinner? Spinner trades these things. What's his thoughts?
Okay, we got S for Shopify, we got P for Pins, and we got R for Roku. So we need a vowel in here, and we can come up with our own acronym.
I was going to add T for Twilio, but if you
the cloud stocks though are, and again, I guess they fit the bill. You know what? We have a huge note we should talk about from SunTrust here today on the cloud stocks. So that could be a driver here as well because SunTrust came out and initiated or upgraded a number of cloud issues. So they are starting Splunk at a buy. They are starting New Relic at a buy, initiating, I guess you say. They're starting Team, TAM at a buy. They're upgrading OKTA. They're upgrading CRWD. All these stocks trading higher. Zscaler, they're starting at a buy. NOW, they're starting at a buy. So you're actually seeing a lot of cloud stocks here trade higher this morning because that's SunTrust note.
Yeah, but the full list of buys that they initiated this morning, SAIL, SAIL, is a buy. Yep. Rapid7, RPD, that's a buy. Palo Alto Networks is a buy. Splunk, you mentioned. Now, you mentioned, I think. Atlassian Team, TEAM, that's a buy. New Relic, you mentioned. Zscaler, you mentioned.
Yeah.
Those are the buys this morning, the upgrades, Okta and CrowdStrike. And they didn't.
Okta? Is that how you pronounce it?
Okta. I don't really know, honestly.
That's my O. I came up with my acronym. It's SPORT. Shopify.
These stocks all held up well yesterday, too, though, Joel.
Yeah.
I mean, Salesforce got hit, but if we're looking, and it's maybe one of the bigger names that everybody's trading. But if we look at the Splunkster, let's just just see how the cloud did.
Sure.
Nah, Splunk didn't really hold up that well. I'm just looking at New Relic didn't really go down. I mean, it's already had it's like any WR already had its fall and its wash out there on the day that turned around on a dime, went up to 50 up to $58. That big green candle, they were closed very strong. I mean, that's been holding up since then. Zscaler. It's kind of holding in there. You have a low to lean on Zscaler. I mean, if you're looking here, 4603 is the low of the move. It is trading higher here, but maybe a leak here. You get an overall market sell-off early or something. Maybe you get a shot at like the close settlement or something. Maybe you take that shot. Again, stopping out on the lows. I'm going to keep reiterating it. If you've got it. Whenever you put on a trade, you got to have an out. And the out on for all these trades is the low of the recent move.
While we're on the topic of ratings,
Sure, let's do
there
some
are a couple
ratings.
other ones here. Credit Suisse is upgrading Raytheon this morning to outperform, raising their price target from 188 to 230. That's notable.
Stock up $2. It's been a
Ah.
performer. I mean, it looks a little bit broken though, and 195 looks like it could be challenging. Overhead supply up there.
Yeah, I see that. I mean, you've popped up here. You went to 19, very light volume here, right near the highs of the pre-market. First things first. Let's get to. I don't even see anything on the dailies here. Up to 197.05. I see a close at 196.19. That was your close on Monday. So I use that as a target, and then your high on Tuesday was 97.05. And I'm really kicking myself. Who was asking me about Boeing in here? I know someone just kept on. I remember someone asked about a stock like 4, 5, 6 days in a row, and that 380 to 390 zone. Maybe I was a little early at 385, but top of the trading range. No clarity about the action.
Yeah, still uncertainty there.
Yeah, a lot of uncertainty. That was a gift there. Trading
Gift
380. Yeah, that was a gift trading there. And even on the monthlies too. I guess with that kind of stock, you got to give yourself, 15, 20 points if you're trying to do a swing trade the way it moves. But boy, oh boy, that 380 be backed off there. Let's see, it's trading down in the pre-market. If you're looking for support in Boeing here, 368. Ooh, we're right there, right? No, we're even below that. 368 was the level, and then below that, 358.55. If you're looking for some support here in Boeing.
Some downgrades this morning. I guess JMP has finally had it with Tesla. They're downgrading it to market perform. Sandler O'Neill downgrading one of your names, Joel. Taubman Centers, TCO, to hold. And Delta Airlines, which amazingly reports earnings next week for the last quarter.
Wow, the airlines.
Earnings season is around the corner. Delta getting a downgrade this morning from Buckingham to neutral.
Airlines got hit really hard the last 2 days. They were right part of this Dow fall, and Delta getting downgraded. I mean, these are big falls. Now, if you're coming here selling them now, maybe you're late to the party, but these are ugly charts and ugly trends. I mean, look at the Spirit Airways made a new low. And if I'm going for SAVE, this is a new, I believe, multi-year low here for SAVE. Well, going back 2018. So it's a new 52-week low for Spirit Air. But Spirit Air was a darling there as early as 2 months ago when it was up at 55. And look, $34. I mean, they have turned on some stocks viciously.
Yeah, wow. These airlines are tough. Let's see. We're trading down of 65 cents here at 53.70. You got to look at yesterday's low as a target here on the downside. That's 52.87. And I'll use the close as resistance. Minor resistance right now at 54.35. But listen, maybe you get a double bottom in here. On the monthlies, though, if you want to be a little bit more patient here, you can wait and buy this thing maybe in the 51 handle. 3 consecutive monthly lows from April, May, and June. Let's just call it 51.40. So if you're looking for a little bit more downside in Delta Airlines, that's according to the monthly charts.
What do you think of Amazon's chart? Here's a stock that has given back its entire June-July rally. It didn't really participate that much in the recent August rally, the August-September when a lot of stocks went up and made new highs. It moved up 100 points, which just seems like a lot, but really for Amazon, it's not that much. Now it's right back down here near the June lows.
Yeah.
First, do we challenge that June low? And secondly, does it hold?
1672 right there. That's your June low. That's really the only thing that you have in there. Besides nothing. 1672. You guys know
important level.
I'm not a big fan of $1,700 stocks, but you lose that 1672 low, folks, and I cannot find a monthly low until 1586. Let's call it 1600. But first things first, let's see what happens at 1672.
What would you guys do with Costco here? Due to report after the close today.
Nothing ahead. I'm nervous too, just because it's a stock that's held up very, very well. I think 290 is just like a wall up there. So is this a stock that needs to really blow it away to go higher? I think so. I think they need, and they're good. I mean, they blow it away a lot of times, so maybe it does do it. So I think I'm just a no trade on this and no touch ahead of the report. Sometimes I like to play them long going into the reports. We know like I'd be long for a day or two ahead of the report with an anticipated run up. I guess it would have worked yesterday with Costco because it wasn't down, but I don't know. It's a tricky tape here right now.
Busy yesterday. Busy there. Parking lot was full. I had to get up there, get a few stuff for the wedding, and it was busy. I mean, I had to even wait in line to check out. 280.34. That's a number on the downside. That's what I'm looking at in today's session. I think you'll find support if you do get to that level, and topped out just over 300. It actually didn't stay above 300 very, very long. You hit 30. You had a close, only one close over 300 at 303.76. That's a ways away. If you do go into rally mode today, let's call let's look at 285.7. That's not too far away. 285.79. Then it opens up for $3. So if you got any nervous Nellies out there short ahead of the report, above 85.79, there's really nowhere to hide until the pair of highs that this is called 88.60. So that's how it's shaping up here for Costco.
Fun stuff from Spinner. Cannabis names are down 78% from their January 18th highs. 78%. You know what I just want to bring this up to though is the cannabis names actually look like they bottomed yesterday to me. So I know you were asking me about one specifically, Joel, and I still long-term, I think the valuations are all too extreme and competition's coming for them. So I don't want these in the long-term portfolio. But short-term, if I was short these things, I'd think about covering because we saw a kind of washout off the hop yesterday, and then they all caught a bid. I don't know if there was a headline or something, but CGC rallied from 2050 up to 2250. So you think about it here, 2150 this morning, 50% retracement of yesterday's move, leaning on the low. I don't mind it actually as a short-term swing trade long right now. If you look at Afria, same story, wash out low right, a few minutes after the open, and then a significant rally, over 10% rally intraday for Afria before selling off at the end of the day. ACB, same story, got down to 380, rallied all the way up to 430. So that is a significant rally, talking about a 12% intraday rally. I think the cannabis names bottomed out yesterday. Just my opinion, but I'm kind of interested in nibbling in some of these, leaning on yesterday's low. So you can see I've got a theme going on here, and it's probably counter to the overall market where everybody else seems to be buying the Pepsis and buying the defensives. I'm actually thinking about buying high beta here right now, leaning on the recent lows of the moves. And this, cannabis names have been completely out of favor. These obviously are not going to my long-term portfolio, like I said, because I still think competition's coming, but you know what? These things are due for a bounce, and it looked like they wanted to bounce yesterday in a terrible tape. If you get a tape that turns, I think these things are going to bounce.
Momos, yep.
Aurora did give updates this morning on a couple of their businesses, Polaris and some facilities under construction. So Aurora had a headline or two that come out this morning. I don't know.
I just feel like we had a washout low yesterday morning. MJ, even in the ETFs, been straight down every single day. First little candle where he actually closed, I believe, green. Did you close green on MJ yesterday? I believe you did. That terrible tape, he closed green. So something to think about. Just something to think about. If I was short these things, I'd cover. My opinion.
Wow, that MJ, what a
dog.
Down from $25.
We've been all over this trade. I mean, we get some right, we get some wrong. I've been bearish these pot stocks for 3 months. And you know what? They've lost 50% here, some of them in the last 3 months. So I would say if I was short these things, and I wish I would have just been listening to myself, shorting these things and covering, I'd be covering this morning. I'd be getting the hell out. I would have covered a long time ago because of the scalper blood. But if you were still in these things short, I think it's overextended here now, and I feel like there might be due for a little bit of a bounce.
And Dennis he's talking here. So he's just talking about turns in the market. And, he's like making, looking at the charts, market sentiment. And, that's where that's where you really can make a lot of money is when you can catch a turn in the market. And it's very hard to do. If you're trying to catch the turn and you're wrong, then you know it. You have identifiable.
Yeah, you're giving yourself. So let's just set up the trade. Go to the big one that that everybody talks about, canopy growth. That's what Kramer talks about all the time too. I mean, you have it defined out. So we're 21.75 this morning. Yesterday's low is 20.52. These things move, so you got to give yourself some wiggle room. But let's just say, we have a week tape here. You can pick this up at 20.5. Risk yourself, or 21.5. Risk yourself $1 and see if you can get up to 25. I like the setup. I mean, so you buy 21.5, you almost get a 3-to-1 risk reward out of there. So, up to 24.5. Yeah, you can get a 3-to-1 risk reward out of there if you were able to pick it up at 21.5 today. Takes out the low, I'm wrong. Move on. I mean, that's what trading is all about, is admitting you're wrong, protecting your capital, and moving on. But, just protecting it as much as you can. I mean, here's, just a setup for you too. I had a day trade short in Walmart yesterday. Why did I do that? Was because I saw the defensive stocks start to roll over, Cokes and stuff. Walmart was trading green. I was like, I'll take a shot. I'll lean on the high of the day. I leaned on it for 20 cents and I watched Walmart fall $2. So I was risking myself 20 cents. I'm actually still in part of the trade here,
Really?
which has bounced. Yeah. So, I mean, you can set up these little swing day trades too, and they can be, just, for a day or two, but you've got to have a defined risk. And I said, okay, well, if Walmart turns and starts making a new high on the day, I'm going to cover my short. I shorted at 116.37, I think. And the high of the day yesterday was 116.56. That's where it opened. So I was like looking at it and saying, okay, no, I'm sorry, I'm in the wrong handle here. I shorted 117.36 yesterday, and the high was 117.56. So I said, I'm going to risk 20 cents, but I see Coke rolling over. And this is why I'm a relationship-based trader. I see Coke rolling over. I see the XLP rolling over. I see XLU. I see some defensive names rolling over. Walmart is kind of defensive. It might do it too. And here I'm looking at it, 3 hours later, and it's down 2 points. So there was a 20-cent risk. It's 10-1, I'm making on my risk reward there. So, because I have, I'm going to physically cover it if it makes a new high, and it never did. So, and that's all your techniques there too, Joel. A lot of times the stock will, high open will be close to its high of the day or its low of the day. And I would just have that in my head. I was like, I can't get back through the open. It could start to leak. And that's what it did.
Daily data is saying, and a lot of people are like, fortunes are made on the short side. Well, fortunes are lost on the short side too. And, stocks when, they, short squeezes and things go on. But I think one thing, just observing the markets over the years, I think the short side used to be easier. It used, because it would fall and fall and fall and fall, and you would get bounces. But man, I mean, like S&Ps, for example, you could have a short on, you could be, 30, 35 handles into it, and you think you have a comfortable stop, but, I mean, if they could move 10, 15 handles, on you. So yeah, there is. I just think this, like when it's going up, and that's why it's a little harder to trade the long side for me, because it's just, it goes up and then it pauses, then it goes up, then it pauses, then it goes up, then it pauses. Whereas, these downstrokes, you get the violent break, but man, oh man, if you're not buying on the way down, when these things turn, you just look.
You can give it all back really quickly too.
Yeah, it's frustrating.
It is. It's been this environment too, Joel. Let's be honest here, and let's look at the S&P for the last 2 years. Look at the SPY chart for the last 2 years. We've got nowhere. We've gone nowhere in 2 years. We've went places, but where we were, if we go back to 2017, look where we were in this is a good point. Let's look where we were, and I'm just trying to grab it in the beginning of 2018. So, you were going back, almost 2 years. We were right there, 286. We made a high 286. Look where we are. We're 287. So here we are 2 years. We've went down, we've went up, we've went down, we've went up. The contrarian has been making money in the last 2 years in the overall S&Ps. The momentum traders, yes, there's a little, depends on your time frame, I guess. But it's been a choppy market. We went straight up from 2013 to 2017, and then we stalled out at the end of 2017, and we've been consolidating here for a couple of years. Is it consolidation to go lower? Is it consolidation to go higher? That is still to be determined. The SPY is trying to top out at 300. It's tried multiple times. Just can't seem to get up over there. So maybe this is going to be, different, and maybe we are going to start to continue to go down. We don't know that yet, but right now, I'll just say it has not paid to short, the market when we've lost 1,000 points in 2 days. It has not paid to buy the market when we're rally 1,000 points in 2 days. That has not been the play. It has more been the play to fade moves. And that's why I'm coming in here today and saying that some of these Momo names that were really hot in August didn't go down yesterday. And that's a little bit of a tell. All market is trying to read the tea leaves, read the hand that it's giving you, and they play with an open hand sometimes and say, hey, what am I seeing here? Well, I'm seeing some relative strength in the momentum stocks. those are the ones that I'm going to want to be long if the market turns. That's all.
What about the brokers? What about the brokers?
We can't touch them. I mean, we're still haven't even stopped going down on those things. So, could they turn? Could they have a bounce, a 10% bounce in a hurry? They could. But you know how many people are caught in these things? They're broken. I mean, the Ameritrade and ETFC, and again, ETFC matched last night, so they're going to go too. I mean, these are temporarily broken. Could they pause? Could they rally $2-3? Yeah, I mean, Ameritrade, just lost 13 points, 30% in 2 days. Could it rally 10% the next few days? It could. But am I going to try to call that bottom? No, there's the risk. How do I even manage that? I mean, you could go, okay, I'm going to lean on yesterday's low, which could get taken out in seconds. So there's no, there's no like consolidation period like a Roku where it stopped going down for 5-6 days now. I mean, Ameritrade, there's still people who are figuring out what does this mean. The digestion period is really still happening. What does this mean for them going forward when you lose a big chunk of your revenue stream? It's scary to be long those stocks right now.
And credit to Wells Fargo for coming out with the downgrade a whole 2 days later. I guess.
Thank you.
That's
late to the party.
I guess the analyst was sick yesterday. I don't really know, or the day before, but
late to the party.
Imbalances. Did you cover any imbalances, Dennis?
Let's go take a look. All small.
Okay.
And yesterday the trade did not work. I thought, some of those buy imbalances, but they did start to come in with the sells at the end there. So they're so small it's not even worth really mentioning. I see Mo 43,000 to sell, Johnson 32,000 to sell. So I see a few there, but they're small, Joel.
If you want a replay of the Beyond Meat move, you're getting to down near the area where it was before that news came out. You had a gap at 142.90. You filled that a couple days ago when you went to 141.10. You actually filled that yesterday. So I know we were very skeptical.
Where is Beyond Meat?
News came Beyond Meat.
Yeah, we got that one right too.
142.84. All right, Spencer, you want to wrap things up?
Sure thing. If you missed any part of our show today, or you want to catch any previous show, our full archives are available on our podcast or on youtube.com/BenzingaTV. I want to thank our guest, Marc Chaikin. Thank you, all of you in our chats, both on YouTube and premarket.benzinga.com. Please remember, all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Questions, comments, concerns, email us, premarket@benzinga.com. I want to thank you again for listening. We'll be back with you folks on Friday.